So let's take a quick look at what happens when you have a share issue mid-year. Up here we have a small schedule showing that at the 1st of Jan, beginning of our accounting period, we brought forward a figure of 10,000 shares in issue as we started the year. So what happens then is on the 1st of July, in this example, at full market value, we issue a further 5,000 shares, which gives a total issue of 15,000. Well, what we have to do is to time average these, so we have a weighted average total across the period. So let's just work out how long we had 10,000 shares. Well, it's 1st of Jan to the 1st of July, so that's 6 whole months. And we can just make a note of that as in this format, 6/12 of the year. And then this, we added another 5,000 at full market value, giving a total issue of 15,000 for July, August, September, October, November, December. That's another 6/12 of the year. 6 over 12. Oops. 6 over 12. And then we simply time a portion by weighting the issue by the time fraction. So it's going to be 10,000 shares times 6 over 12 gives us 5,000, and we have 15,000 shares times 6 over 12 for the second half of the year. And if we add those two up, 5,000 plus 7,500, that comes to 12,500 weighted average shares in issue across the period. And then it's a simple matter of just using those numbers to work out our earnings per share. So we can add in 12,500 there, profit after tax 1,200 less the irredeemable preference shares of 1,000 gives us 11,000. Tidy that up. 11,000 over 12,500 will give us a final figure of, plus that divided by that, 0.88. So that's 0.88 pounds or 88 pence or cents, depending on what currency you're working in. So that is the earnings per share. So what did we do? Just to summarize, we took the total issue, we worked out how long that issue was in issue, so it was 6/12 of the year. Then we added 5,000, total issue 15, and that was again 6/12 of the year. And the weighting average just multiplies the total issue by this time fraction, 6/12. Same for this one. 15,000 for 6/12 of the year. Add the two together, 12,500, and that's our denominator for this EPS fraction. Weighted average shares in issue, 12,500. The numerator, same as before, profit after tax comes from here, 1,200, minus the irredeemable preference shares of 1,000, gives an EPS in this example of 88 pence.